Talk with Pushan Mahapatra, who's from SBI General. He's the MD and CEO. Mr. Mahapatra, thanks for taking our time and speaking with us today. You know, growth, competitive landscape versus ICICI Pru and Bajaj Alliance, all have been pushing hard. How is it that you're mapping the landscape in which you're currently doing your business?
If you see in the first half of the year, the growth for the industry as a whole was around 13%. And we grew at around 51% on the back of very strong growth across all our major lines of business, be it crop, be it health, be it personal accident, be it property. So that way, we have continued our journey where we set to outstrip the industry growth by a substantial margin. So the first half, the growth has been very strong, and it's continuing for the 2 months after the first half also.
So digital, what are they doing and what you're doing different both on analytical and claim settlement? On digital, this is something where technology is starting to play out very, very strongly, both on the customer acquisition, pricing and claims. Today, we are all experimenting with bringing in a lot of artificial intelligence and machine learning into our decisioning process, be it on the underwriting side or the claim side, especially on the retail lines, especially health, motor and homes. And on the claim side, both on motor as well as on health. On motor, last year we started something called as live streaming of photographs. Instead of sending a surveyor on site, we had digital links which helped to take photographs and video recording of the damaged vehicles and using machine learning to adjudicate claims. And this has been very successful. We are looking at taking it even further and allowing the machine to make all the decisions and only look at exception handling. Okay, so where do the combined ratios stand now and what is the outlook for the future?
Indian GI industry is not great as far as underwriting results are concerned, but we as a company are quite focused on it, and for the last 2 years we have been returning underwriting positive results. First half also we had underwriting positive results, and we hope that this year also we should continue with that, but this year has been fairly challenging considering the fact that there have been a large number of weather related events throughout the country, right from Fani cyclone on the east coast to large number of flood incidents across the country during the monsoons this year. So losses on account of weather incidents have been high this year, but in spite of that, I think we should maintain our positive underwriting results.
So, given the erratic weather and calamities that we've seen this year, how has the crop insurance vertical done?
It's done reasonably well. Again, what I always hold the view that if you are in crop, you must follow the golden rule of insurance to diversify your portfolio. Do not have all your eggs in one single basket in terms of a weather zone, in terms of crop, or in terms of season. So that is something that has stood us in good stead over the years, and I think that's the way to go forward.
And what's changed in the competitive pressures within the last 12 months?
Given that this industry has very low penetration, actually there is space for all of us to grow very strongly. So from that point, yes, there are competitive pressures, especially in a product like motor, because there are finite number of vehicles which can be insured. So there can be some pressure on that, but other lines given that there's so low penetration, there's market for everybody. So we can actually grow without really taking market share off from somebody. So what becomes very important, and that is something that we have been able to build, is build on the distribution, so that you can take down your distribution to the last corner of this country, because there is a person who needs insurance. And that is something that the industry has to build to make their distribution go to the last mile.
Okay, what are the trends that you're seeing in your digital channel sales? What is the kind of growth that you're foreseeing and you witness versus the traditional growth that you had been incurring? And what then is your outlook going forward?
Well, the growth has been phenomenally, as a percentage, has been very, very high. But they are still small numbers compared to the physical channels. But the way they are growing, I expect that in about 3 to 5 years, they should form a fairly significant part of our overall sales. I would expect 5% of that to come as digital sales, pure digital sales, not assisted digital sales, but pure digital sales in about 3 to 5 years.
Right. So what is the guidance for the long-term growth?
See, we have been actually focused on two things: increasing insurance penetration, thereby having a good growth rate on top line, which we expect that should be double of that of the industry growth rates, and returning satisfactory shareholder value, which is basically reflected through our strong return on equity. And that is something that we would like to continue going forward.
Okay. So what are your thoughts on competitive pressure within autos given the current slowdown?
See, one major change this year has been that number of new vehicle sales has been down. Therefore, there is a pressure on insurance in the motor segment. It's a conscious decision by certain companies to play to their strengths, and I think that is what we are doing. Rather than concentrate entirely on growth, look at value.
Okay. Where are the reinsurance rates headed? What's your take on that?
See, ultimately, every risk has a price. And that is something that we need to be cognizant of, that if somebody is taking a risk, he expects a reasonable return on it. It should not be very high, but a reasonable return over the cost of capital is something that everybody will expect. And that, I think, is falling in line. And if we see the loss data over the years, I think pricing in certain segments were inadequate, and therefore some revision in pricing in property has taken place to basically meet the cost of the risk. And that's something which is a dynamic in nature. If the costs come down, the prices will also come down.
All right. Thanks so much for joining us and taking us through some of the trends there, Mr. Mahapatra. Good to have you with us this morning.